Vanessa Easter is a single mother who drives a bus for the handicapped 7 days a week just to pay the bills. The last thing she wants to worry about is finding a new apartment.
Everything is very convenient for where I live here now. My job, my babysitter, my daughter's school.
Unfortunately, the owner of her New York City brownstone can no longer pay the mortgage. If the bank repossesses the property, a likely scenario, she and her 5-year-old daughter will have just 30 days before they're out on the street. She'd be one of a growing number, not of owners, but of renters, losing their homes to bank foreclosures.
I don't have the money to financially afford to move just so fast.
A lot of property in this neighborhood was purchased by people who were offered loans they really couldn't afford and often didn't understand. And now the neighborhood is paying the price with one of the highest foreclosure rates in the city.
Bed-Stuy is in here.
The Furman Center for Real Estate and Urban Policy at New York University has been studying the impact of foreclosures on renters.
Well, there really aren't great national statistics out there because every locality tracks these things in its own way. But we can, by looking at New York, begin to get a sense of how this might be affecting cities around the country.
In New York City, 40,000 renters were living in buildings facing foreclosure in 2007. Easter is lucky. She discovered her landlord's plight by accident when a real estate agent working with him knocked on her door. Many renters have no warning.
No one talks about the renters. It's not even really a concern. They just see us, oh, we're just people who pay and we can just move on and find another place. It doesn't work that well.
Some states, like New York, are considering legislation that would force banks to alert tenants at the beginning rather than the end of the foreclosure period. That's small consolation for Easter and her daughter, who may soon be looking for a new home. Kristen, Saloomey, Al Jazeera, New York.